Okay, welcome back, guys. Welcome back to the Forex Feast channel. My name is Sunday Okigwe. Welcome back. Um, this channel is dedicated to the retail trader. Okay, we are literally going to arm the retail trader with the knowledge and the skills required in order to go in and literally feast on the Forex market. Okay, anyway, without further ado, let me get into the topic for today, which is how to calculate lot size. Now, first of all, let me just go ahead and say this. If I had $1 for every time I have been asked this question in particular, how do I calculate my lot size? How do I calculate my lot size? Sunday, can you tell me, how do I calculate my lot size? Okay, what if it's a $500 account? What if it's a $2,000 account? What if it's a $100 account? Listen, if I had $1 for every time I have been asked this question, I doubt I will even need to make this video. Okay, so this video, the point I'm trying to make is that this video is long overdue. Okay, anyway, without further ado, let's get into it. As you can see here, I am using Google Sheets. And by the way, at the end of this video, I'm going to see if I can provide this link for you guys so that you can go in and copy and paste or download this however you want to have this. But this is just a simple spreadsheet. All the calculations are there. It's actually fairly simple to come up with something like this. I'm pretty sure some of you guys out there can come up with something even much more robust than this is. But anyway, when you're going in to calculate your lot size, all right, there are some things you need to know. Okay, so this is where we go to the right hand side of the screen and we are looking at the things to know text. Okay, you see those three questions right there. Okay, the first question, and in my opinion, the most important question you need to ask, excuse me, the most important question you need to ask is, how much risk am I willing to take on? Okay, what percentage of my account do I want to risk? That is the question that should be in the back of your mind as you are going to any kind of trade. As you are going into any kind of trade, that question should be lingering in the back of your mind. What percentage of risk am I willing to take on? Okay, that is a very important question. Okay, now, if you are a newbie, okay, if you are just starting out in the Forex market, you're kind of feeling your way around, you want to just kind of dabble in it, see how you fare with Forex, you definitely do not want to be risking anything more than 5% of your account. Please write this down. That is very important. You do not want to be risking more than 5% of your account in any given trade. Please write that down. Okay, now you notice over here the answer to the question is 2 to 5. Okay, meaning 2% to 5%, within that range. Okay, if I'm a newbie, I would be leaning towards the 2% side. Okay, the 5% is the way you should view the 5% is like something you should work up to. Okay, but starting off in the Forex market, it needs to be 2%. As a matter of fact, the very good expert Forex traders out there, if you like, YouTube is full of them. YouTube is full of a lot of these Forex geniuses. I don't even want to call them gurus. There are a lot of good Forex traders on YouTube. There are also a lot of scammers as well. But even the great Forex traders abide by this 2 to 5% range. So how much more you? Okay? How much more you? You don't know your left from your right when it comes to Forex. You're just starting out and you want to risk more than 5%? No. You should never exceed 5% risk in any given trade. Now, that leads us to the second item. The second item says, how many positions are you going to open? And it leads the range right there. The answer right there says 2 to 4 positions. But I want you to ignore that answer. Okay, it should be 1 to 2 positions, maximum 2 positions open, especially if you're just starting off. Okay, and even to take it further, I really don't care if you have up to 10 or 20 or 30 positions open. the point and the fact of the matter is, regardless of how many positions you have open at any given time, those positions combined should not represent more than 5% of your account. Okay, let me say that again. It doesn't matter how many positions you have open at any given time in a trade, as long as those positions combined, okay, be it 10, 20, 30, 40, whatever, okay, those positions combined should not represent more than 5% of your account at any given time. This is very important. Why am I stressing this? Okay, now the reason why I'm stressing this is because it is a fact of life that in order to be successful as a forex trader, and even as a trader in general, I don't care if you trade forex, you trade crypto, you trade stocks, okay, I don't care what you trade futures, you trade options, I don't care, you trade binary, you trade baseball cards, I don't care what you trade, okay, if you do not exercise sound money management, you are going to find yourself in a world of hurt. Okay? This applies to anything in life. It even applies to life in general. Okay? Let's say you're someone, like the average American out here. Okay? You go in, you work your 9 to 5, you're making $50,000 a year. But you know how to manage your money. You know how to save money. You know how to spend money. You know how to invest money. Do you know that at the end of the year, you will have much more money in your bank account than someone that's making six figures, that doesn't know how to manage their money, that doesn't know how to save their money, that doesn't know how to spend their money? It's a fact of life. Okay? For a lot of us out there, I know I'm preaching to the choir. But anyway, I digress. Let me move forward. But I wanted to stress this. It's very, very important. Okay? Because let me hit this one more time and then we'll move on. At 5%, of your account, okay, we're taking the 1,000 as an example, but at 5%, you would have to be exceptionally bad. I mean, you have to be the worst trader in the world or close to it. Okay, you would have to be the worst trader that ever lived to blow your account. Now, mind you, okay, I might be being a little bit dramatic here, but I don't want you to think that it's impossible. I don't want you to think that it's impossible. It has definitely happened. Okay, even at 5%, people have blown accounts. Okay, for several reasons. Either because they weren't judicious enough with their stop loss. Okay, they kept playing around with their stop loss. They kept maneuvering their stop loss. They didn't stick to the game plan. You see, when you don't stick to the game plan, even at 5%, you can still be in trouble. But it's hard. It's very hard. Okay, it's very hard to lose 20 trades in a row. I mean, even the luck factor says that you're going to at least win 2 or 3 trades. Just by closing your eyes and hitting the buy or hitting the sell button, you are guaranteed at least 2 to 3 wins out of 20. Okay, so it's a very difficult thing to do, which is the reason why money management, again, okay, I know I'm really stressing this at this point. I guess I'm overstressing it. Money management is very, very important. Okay, all right, so we go to the third bullet, which is the pip range. Okay, now I put 10 pips here because when I was creating this from the standpoint of, talking to an audience of new forex traders. Okay, but if I had to speak for myself, I would go with this range right here. Okay, 35 to 50 pips. Actually, I even do more than that. It doesn't mean that I am going to sit there and wait for a 60 pip take profit to hit. Okay, that's not always going to be the case because I am more of a scalper. Okay, I'm not a swing trader. I am more of the scalping kind of a trader. Those of us out there that are a little bit more experienced understand what I'm talking about. I like to get in, handle my business, and get out. Go in, snatch up the bag, get out. Like an armed robber. That's how I operate with these markets. I don't joke around, especially with GBP. GBP is a kind of a pair you don't want to joke with. GBP. Anyway, the reason why 35 to 50 pips is something that you should start employing into your trading strategy once you've started getting used to, setting your stop loss and setting your take profit, and closing half of your position or a portion of your positions, setting a take profit 1, a take profit 2, a take profit 3, things that we're still going to go into in future videos. Once you start getting comfortable with setting trades, letting your trades develop, looking at market structure, and kind of setting your trades according to how things line up in the charts. Once you get comfortable with trading, you definitely want to open up your pip range, okay? Because there's something called a spread. Okay, a spread is the difference between the bid and the asking price. This is how most of these brokers, actually, this is how all of these brokers, this is how they make their money, because there is no brokerage that doesn't use spread. Okay, they all take advantage of the spread. All right, the difference between maybe a 1 point spread or a 2 point spread, that would depend on the broker, and there are several of them out there. None of them sponsor this video, so I'm not going to get into any of them, but there are several brokers out there. Maybe in a later video we can talk about different brokerages and which ones are better, and which ones we can get into all that. But for the purposes of this video, okay, you want to take into account the spread. Now, when you take into account the spread, say you have a 2 point spread or a 3 point spread, that automatically reduces this range by 2 or 3 points. Okay, so if you're setting your stop loss at 10 pips, it's really a 7 pip stop loss. Okay, because the moment you set that trade is already going to be in the negative because of the spread. Okay, how many of you guys have noticed that the moment you enter a trade, you see the negative right there, right off the bat? That is the spread in action. Okay, so if you set a 10 pip stop loss, chances are the moment you open the trade, it'll be 5 minutes or less, and your stop loss is going to be hit and you'll be taken out of the trade. Okay, so you want to at least, at minimum, this should really be 20 pips. Okay, now look what happens to the lot size once I put the pip range here. Okay, the calculation is automatic because, of course, you can do this with spreadsheets. Okay, it does the calculation, so the lot size accounts for the increase in pips. Okay, so if you're in the trade and say, for instance, let's increase this again, let's go to 25. Okay, when your pip range is now 25, you see your lot size reduces. You see how that works? Your lot size reduces. So you are always in a position using this spreadsheet to determine what lot size you need to get in on in order to maintain that 2% to 5% account risk. Again, I cannot stress this enough. You do not want to surpass 5%. Okay, so we can keep going. I can put 45 right here. You see how the lot size adjusts? Okay, I can change the balance here to 500. You see how the lot size adjusts? Okay, you see how all the numbers adjust? What is the point of this exercise? The point of this exercise is to show that with consistency, with discipline, with commitment, in 20 trading days, which is roughly a month, right? There are 5 trading days in a week. 5 times 4 weeks, right? 20 trading days is roughly a month. Okay, some depending on the month, it could be 22 days, but you get the point. In a month's time, no matter what amount you come in with, okay, I don't care if it's 500, 1500, 2000, whatever amount you come in with, at the end of a month, you can double that amount. But it takes discipline. It takes being deliberate. It takes being consistent. It takes sticking to your game plan. Okay? Sticking to the game plan, not deviating from the plan. Okay? So, anyway, that's what I have for you guys today. And listen, guys, If you enjoy this content, I'm going to ask that you do me a favor and you hit the like button. I mean, annihilate that like button. Hit the subscribe button. Hit the notification bell so each time I post a video, you get the alert. Share it with your friends. Share it with your family. It helps support the channel and it makes it possible for me to continue to post videos such as this. Okay. Till the next time, I want to wish everybody a happy trading until we meet again. Okay. Later, guys.